Hi, I'm Dave Dickens with Kansas City Financial Advisors. This is our monthly economic update for November 2017. So if you have a TV or you've seen a newspaper, you know that the stock market again hit new highs in October. That was largely driven by a pretty good third quarter earnings season, and what was more important to me, corporate revenues were actually higher in the third quarter, and those have been problematic over the last couple of years. So that was a real positive for my outlook on the stock market going forward. We also saw a recent new high in consumer confidence. And so since our economy is highly consumer driven, that was a real positive as well. Inflation was reported just in the last couple of days as being up an annualized 2.2%. And so that's been creeping up over the last months. Wholesale inflation, commonly referred to as the producer price index, was actually up 2.6%. What does that mean for you? Well, if you're retired, it means that you're getting a Social Security pay raise for 2018. The Social Security Administration announced that there's going to be a 2% cost of living increase starting in January. That follows up on a paltry 0.3% in 2016 and a 0% increase in 2015. What it really boils down to is that the average Social Security recipient is going to get about 25 bucks extra in their paycheck every month. We had a little bit of Fed news just in the last month. President Trump nominated Jerome Powell to replace Janet Yellen. Now he has to be confirmed by the Senate, but there's a very high probability he will be. He's not a household name, but he's been on the Board of Governors, the Federal Reserve Bank Board of Governors, since 2012. The expectation is that he will keep Fed policy pretty darn steady, just like it's been since the bottom of the financial crisis in 2009. European Central Bank was also in the news. They're expecting to start cutting back on the amount of bonds that they buy every month. That may not sound like a big thing, but they buy 60 billion euro of bonds every month, and they're expecting to cut that back to 30 billion worth of bonds. And then they expect to keep their overnight lending rate at about zero well past next September of 2018. That's stimulus, that's economic stimulus, and that's going to continue to keep probably their stock market. It'll certainly help our stock market to continue to go up. At a minimum, it won't create any headwinds for us. Lastly, I want to cover a quickie little checklist, a year-end checklist that you might want to take care of for yourself and your family before we get to December 31st. 4 things. First, I'd like to encourage you to make sure that you check all the beneficiary designations on all of your investment accounts. Those don't often change, but when they need to, it's really, really important that you change those, because you can't go back and make a redo once someone dies and the beneficiary designations appear to be wrong. If you haven't taken your required minimum distributions yet from your IRA, if you're over 70 and a half, the penalty on that is 50% if you don't take the distribution. So make sure you've got those in place. Melody is going through all of our accounts here, and we'll be in touch with you if we recognize that you haven't taken those. If you're looking at doing any Roth conversions, those have to be done by December 31st of 2017 to get it into this tax year. If you don't know whether you should be doing a Roth conversion, then just give Dave or I a call. We're happy to sit down with you and talk through that process with you and whether or not it might be a wise move for you. And then lastly, you want to take a look at all of your non-IRA investment accounts and see if there's any tax losses that you should harvest before year end, or tax gains, long-term capital gains that you might want to take, especially if you're in the 10 or 15% bracket. Because under current tax law, those long-term capital gains are taxed at 0% if you're in the 10 or 15% normal tax bracket. Well, that's it for the November update. We want to wish you a very happy Thanksgiving to you and to your family. And we also want to express our thanks to you for the opportunity you've given us to work with you and your family on your investments, your taxes, and your estate planning. Have a great Thanksgiving and a great November.